If you've been seeing headlines about a Minnesota housing crash in 2025, you've probably been a little scared to buy a house and maybe even worried about your own property value. And so what I'm about to explain to you is likely going to be surprising. I've had a few different clients reach out to me in just the last week or so, worried about their own home values or thinking that they should wait to purchase a home because home prices are going to come down and they don't want to buy at the top of the market. They want to wait for those home prices to crash so that they can get a better deal. I think it's important we set realistic expectations around this though. My name is Allison Larson and I've been helping people purchase homes in the Twin Cities for over a decade. Today, I'm going to break down for you what the experts are actually saying and what's happening in our hyper-local market, not just the national averages. Because here's what people don't realize. All of these headlines screaming crash, bubble, burst, all of these crazy things typically are not written by people who actually work in the market, specifically in the Minneapolis market. So here's what's actually happening. Most of these articles that are referencing crashes or bursts or bubbles in the market, they're typically indicating that they expect to be a 1% correction in the market. Okay, what does a 1% correction actually mean? That would mean like a $400,000 house selling for $395,000. I'm here to tell you that when we've seen over the last 5 years, home prices increase over 43%, well, gosh, a swing of $5,000 in price for a couple of months doesn't really seem so scary. So here's what I want you to do. I want you to stop reading national headlines. Lean into what is specific to our local market and where we're seeing the housing stats are actually at. So now here's why Minnesota actually, in the Twin Cities specifically, performs differently than other markets in the country and why it always has. Everyone remembers the horror stories, or maybe you don't remember the horror stories, but you've seen The Big Short and you saw or have heard about home prices dropping in 2008, 40, 50% in Phoenix, Las Vegas, these big major cities. But guess what? In Minnesota, they actually only corrected by 15%, much different than 40 to 50%. And here's why. Economists refer to Minnesota as an economically diverse town, meaning we're not a one industry or one business town. If one industry is hurt, we still have others to balance it out. In fact, we have 15 Fortune 50 companies headquartered right here in the Twin Cities. So when things like COVID happen and all of a sudden restaurants aren't open, well, that doesn't plummet every homeowner in the Twin Cities where all of a sudden they can't afford to pay their bills. We're completely diversified here in the Midwest. I challenge you to do this. Look at the neighborhood you grew up in or the neighborhood you currently live in and count the for sale signs. Are there a lot of homes in your neighborhood that have had a for sale sign out in front of them for months and months and months at a time? Or are most of them selling still the same weekend or at a minimum in the same 30 days? If we were even seeing an even market, you would see the average for sale sign sitting in front of a home for about 4 to 5 months. Right now, everywhere in the Twin Cities inner circle, we're really still seeing most properties moving in the first 30 days. This is a healthy market. This is a market we want to see. It's a market it's enjoyable to buy a home in and to maybe sell your existing home to purchase the next home in. But here's the real opportunity that a lot of people are missing out on. While some are sitting by the sidelines because they're scared of a 6.75% interest rate, there are still people buying homes, moving homes, and selling homes. And here's why. Your interest rate is not forever. The home purchase that you have is. So while homes are still appreciating on average 3 to 4% all over the state of Minnesota, does it really make a difference if your interest rate is 6.75%? If you can just refinance it as soon as interest rates come down? But here's really where the magic comes into place. For example, right now there's 120,000 people in Hennepin County who are currently renting a home who can qualify to purchase. There's another 400-some thousand people who cannot qualify to purchase a home. When interest rates come down, we just have more people to buy those same homes that are for sale on the market, which is going to create crazy bidding wars and for those home prices to go even higher than they are going year over year with their forecasted appreciation. Point being, if you're finally seeing homes on the market that you love or starting that next phase after marriage to buy your first home, to start a family, please do not let the headlines scare you. Half the time, they're not about our market, and we can be pulling hyper-local data for you. Every single month, I host a free webinar series where I'm always talking through what the current market trends are, what it takes to purchase in this home, and what we are seeing clients focusing on, and where really the opportunity is. In our next webinar, I'll be breaking down for you what are 3 strategies homebuyers can be focusing on right now so that they can be building wealth and winning for the long term. If this is something you're interested in, there is a link in the description below for you to sign up.